Hi everyone, I'm İlayda, CEO of Clemta, and today Begüm will also join me for this webinar. Begüm is our tax operations manager. Begüm, I'm so happy to see you here together with me.
Hello, hi everyone. My name is Begüm, and in here with Clemta, we are helping international founders navigate their IRS taxation and also state tax level filings. And I'm very happy to be here with you today and clarify these topics for you.
I am so happy to have you here today as well. So, everyone, by the way, we have a Q&A box here. So, during the webinar, during the topic, while we are discussing, if you have any question, just let us know. If it is relevant to the topic, we can kind of answer during this scene. Otherwise, we can answer all of them at the end of the webinar. And if you can find it, there are three dots. And here, yeah, I think you could also find it. By the way, if you can also share, which industry you are from or which country you are from, we can also kind of customize this webinar for you as well, as much as possible. So we can also learn more about you too. So this will be an interactive webinar. For the ones who don't know us or Clemta at all, let me also share a brief screen. So actually, I know most of you know Clemta, but for the newcomers, new joiners, we are an all-in-one platform helping entrepreneurs starting their US company and then managing their financials, as Begüm also said. And we have helped more than 18,000 entrepreneurs from all around the world, from Europe, MENA region, LATAM region, of course, America and Asia market. And what kind of makes us different is, first of all, we have the highest customer satisfaction score over Trustpilot and similar platforms, which is we are really proud of. We have an in-house legal and CPA team and also bookkeeping team. So if you have any question about structuring your company or handling your financials, you will be kind of referred to the best person in the team. And of course, you are coming from all around the world, so we try our best to support you in many language as we can. But for now, we are helping you in English, in Spanish, Arabic, Turkish, Russian. So also let us know if you also need any further language in the stack as well. But we would be happy to support you, and we do this through our best-in-class tech platform. And I hope you enjoy it. Or if you are still not is not a Clemta member, I hope you will enjoy it when you join us. But of course, in today's session, we will discuss taxation period. So all of you has your US company and all of you has a legal presence in United States. So, Begüm, actually, I want to kind of ask you a question like an entrepreneur. So, I formed my
Of
company.
course.
I formed my company in 2025, last year, and I have no idea about taxation in the United States. So, how do you know US taxation system look like? So, what I need to know as an entrepreneur?
So, in the US business, there are two main tax obligations during the year. First of all, where your company was formed, which is called state level taxation. And this is actually a privilege payment of doing business in the state. So, for example, if your company was formed in Wyoming, there is a fixed $62 annual report fee every year. And also you need to renew your business address and registered agent address every year. And on the other hand, by the way, it totally depends on your where your company was formed. It's not only for Wyoming, and there are also some other states, for example, Delaware, Florida, maybe, or maybe Texas. It totally depends on your company goals, business goals, and changes the fee depending on the state. And the other one is federal level taxation, which is much more complex because almost every foreign entrepreneurs are very confusing about this situation because Some people are thinking that if didn't generate any money or like never did any transaction during the fiscal year, they're considering they don't have to pay any tax and they don't have to file any tax return. So the first thing is we need to be very careful about it because filing and paying the tax is totally different two topics.
Mhm.
First, you have the federal level tax return. And filing the federal tax return is totally changes regarding of your company type. If you formed an LLC, as you mentioned, this is great because it's a pass-through entity, which means the IRS doesn't consider you separately from your entity. That means if you generate any profit during the year, you will be paying taxes where you reside, unless there are, of course, some exceptional situations such as effectively connected income, which is a different topic. It's a little bit detailed. Maybe we can discuss it later. For example, as I mentioned, if you formed an LLC, the LLC profit flows through the owner. Therefore, it's much more easy. But if you're having a business goal such an investment, if you're waiting for an investment for your company, maybe you built a corporation, C-Corp. And if your company is a C-Corp, it's a little bit much more complex, to be honest, because there is this situation called double taxation. So the IRS considers you separate person from your company. Therefore, if your company, am I being too fast right now?
No, actually, it's great since it's always complicated whether you are fast or not.
Okay. I'm sorry if I'm being fast, so I can get a little bit slower, and I'm also very nervous right now. If you generated a profit during the fiscal year as a corporation, you are firstly paying 21% federal income tax as your corporation, as your company. Then, if you distribute some dividends to your shareholders, you are also paying the personal tax returns for their shareholders. So you're paying taxes two times. This is much more complex than an LLC structure. And we can say most of the LLCs do not pay any taxes in the US because most of them are not residing in the US. Therefore, since if you generated any profit during the year, you will be paying your taxes in your own country, not the US. But in the C Corp structure, it changes because the corporate itself is a US entity, US person, and it will be paying taxes on the corporate level to the IRS, 21%. And that's basically it. So, do you have any questions at this point?
So actually, for now, I don't have any question, but to wrap up, we can maybe summarize it like there are two types of tax system in United States. As you also said, one of them is state level taxation, while the other one is federal level taxation. And actually, generally, state level taxation is kind of easier part since you also said generally international founders select tax-friendly states like Delaware, Wyoming, Nevada, Florida, Texas, etc. So they generally don't need to pay personal income tax or corporate tax in the state, relevant state. But of course, it doesn't mean they will not pay anything. But on the state level, they generally pass this. But as you also said, for the privilege of incorporating in such states, they also need to pay some annual fees, some franchise taxes. Even if it's called tax, it's generally a fixed fee, like it is starting from 300 in Delaware. It is fixed at $62 in Wyoming. So you just need to pay this and pass this year. On the other hand, as Begüm also said, federal level taxation is much more complex and depend on your business type. And as an international founder, your business can either be LLC or C Corp, but of course you already have your company, so you already had your choice. As Begüm also said, it is super important. C Corps are subject to double taxation. First of all, company pays, 21% federal tax ratio over their, profit, and then if they distribute dividend, personal income tax may incur. On the other hand, if you have an LLC, you will directly pass C-Corp taxation, so federal income tax, federal corporate income tax. So in this case, actually, it depends on whether your company is one member or multi-member. So if you're a single member LLC, by the way, all LLCs are pass-through entities. So it means they are not subject to corporate tax. And they generally doesn't pay, federal level corporate tax at all. And profits and income directly flows into the members' income or losses. So if you have an LLC, your company will not pay any tax, but as individual, as the owner, you will be paying personal income tax, either in your home country or in the United States. So what changes depending on member structure and number is, if you're a single member LLC, you'll be considered a disregard entity, and there are a few more tax exemptions you can benefit from. So generally, there is no separate tax return for your company, but you need to, first of all, file your personal income return to show what you have earned from the business. And as an individual and as an international individual, you will also need to file additional forms showing that you have more than 25% of the company and you're an international founder. If you're a multi-member LLC, in this case, the company itself file a tax form, but still does not pay corporate tax on federal level. And then the owner of the company will pay personal income tax, again, based on, revenue, profit, or loss from the business. So, in general, LLCs are not subject to corporate tax. Profits and loss directly flows into individual level. On the other hand, as C Corps, they are separate legal entities and they are subject to 21% corporate income tax. So it is inevitable. And if you distribute dividends later, then there will be also another, individual tax coming to the scene. And as Begüm also said, it makes it much more complex. So, by the way, here we can also share that LLCs sometimes choose C Corp taxation only for strategic purposes. Since in LLCs, individual tax ratios will apply, they can start from 17% and can be up to 37% in United States. But if you select C Corp taxation, then you'll be taxed like a C Corp and it is fixed ratio of 21%. But of course, it's a strategic decision. So before doing any election, you should definitely consult with your, advisor, maybe tax consultant to make the best decision both for yourself and also for the company. But in general, if your individual tax ratio is over, 21%, and if you reinvest the money you earn from the company, generally companies also prefer to do the C Corp election. But as I said, you should definitely consult with your advisor. But in general, so Begüm also mentioned a great point. She said, okay, in any case, if you have a company, you need to file your income return, tax return in the United States, no matter what, single member, multi-member, C Corp, you need to file certain forms. But the company type and sometimes for LLCs, number of owners will kind of shape the type of tax return and also where and how you will pay your taxes. And for the personal income taxes, generally US has double tax prevention agreements between United States and your home country, and you should definitely check it. Since generally you are only obliged to pay tax once, not twice for US and also in your home country. It actually saves your profits and your earnings. Um, if you have any question, of course, you can reach out to us, by the way, after this webinar or during this webinar as a question. But still, it's really important to note that you will either pay your taxes in your home country or get an ITIN to pay your taxes in United States. But still, in any case, you need to file federal tax return. As I can, summarize this. I know summary was kind of longer than expected. So at this point, actually, Begum, I want to ask you a few things. So, in any case, we discussed, we definitely need to file a federal tax return. So, before filing a
Mhm.
return, as an entrepreneur, what should I do? How can I be prepared for the filing process?
So the first thing is, it is as advisable that you need to, um, I'm really sorry, 1 second. You need to make your expenses from your company bank account. Most of the people, most of the company owners are like doing their expenses on their personal card, which is not prohibited at all, but it will be a very complex thing at the end of the year. Why? Because you need to organize your financials as your personal and business expenses or incomes maybe, and it will cause a little bit complex and chaotic situation. Therefore, you need to first organize your financials from the beginning of the year. All of the invoices should be like prepared already, and all of the bank transactions are um, organized as your personal and business expenses. And what else should I say? Um, can you
Maybe
do?
Sure, maybe you can also add, as you also said, all transactions should be done through bank or recorded, even if in cash. But all transactions should also have a proof, like, invoice, receipt, or agreement between the parties. By the way, we will not need,
Mhm,
provide this to the IRS, the highest tax authority in the United States. We don't need to provide everything to them. We just need to file
mhm,
it. We just need to file our return. But still, if in 3 years, 4 years, if there's an audit from IRS, we will be required to show all these proofs. This is why it is important to, also keep and kind of keep these records, including, receipts, agreements, everything supporting your business transactions. As Begum also said, it is not strictly prohibited to use your personal card unless you're a C Corp. Since LLCs are generally not subject to corporate tax, so it's a kind of much more smooth process, but for C Corps, they are completely separate entities, and you are not allowed to use your personal card for business purposes. Even if you use, you cannot show them as an expense, which
mhm,
kind of brings us to the deductions. So, um, if you, for example, if you want to, summarize the deduction point, which is a very crucial point for entrepreneurs, since they can save tax a lot and drastically. What should they do in
mhm.
this regard?
So the thing is, if the expenses directly related to your business, and for example, if you like made a personal expense, but it was for the business, like your office rental, maybe you're using your house as an office, you can totally deduct them most of the time. But sometimes meal and travel for even if for business purposes cannot be truly 100% are deductible because because of the lack of documentation, as you already said. If you cannot prove the expense what was directly related to your business purposes or the business nature purposes, the IRS doesn't accept this as a deduction because you can't prove it. They can consider it as a personal expense. For example, if you're doing business for e-commerce and you're showing an expense for like traveling Hawaii for 40 days, the IRS may not consider as a deductible travel business expense. Therefore, it is like maybe not 100%, but 99% should be related to your business.
Definitely.
Hope I
By the way,
hope
if
I could explain it.
no, actually, it was great, and it was a super edge case since if I was traveling to Hawaii for 40 days, IRS in under no circumstance will expect it. Even if you have all the proof about showing it's business related, it's really hard to convince. But the best part is, of course, you have revenue and you want to pay less tax as possible. And your solution will be deductions, as Begim also said. And if your expenses are ordinary and all business related, so you can deduct almost all of them. In principle, 100% of them. What I mean
Mm-hmm.
by ordinary is, as Begum's example, if you are traveling to Hawaii, so it is not ordinary at all. Or if you are staying in a hotel for a business trip, but the hotel is maybe $40,000 or $4,000 per day, still it is not ordinary. And what I mean by necessary is actually it is required to kind of grow the business, and the sky is the limit, you know. Of course, you will have business meals to grow your business. Of course, you will travel for international fairs, or of course, you will pay for some subscriptions again. So these are all business expenses, and in principle, 100% deductible. And by the way, you can also deduct your formation costs as well if you formed your company last year. Since when you paid your formation fee, the company didn't exist, but actually you did this expense for your company, and DRS accepts it. So you can also deduct this as well. So you can deduct all software subscriptions or all payments to contractors, fully deduct. But as Begim also said, especially the gray areas are meal and sometimes home office expenses. Why meal? As Begum said, it is really hard to prove that, you know, it's business related. And generally, IRS assumes that every meal, even if it's for business, every meal also includes pleasure. So you can only deduct 50% of it. It is a fixed rate. On the other hand, for home office expenses, IRS asks very serious proofs when they kind of do an audit. For example, they ask you kind of allocate a certain part of your home directly if you are working from home, and they also ask whether it is written in the agreement, for example, with homeowner. So it's kind of hard to prove. But if you can, of course, you can deduct all the relevant portions. And if you allocate a portion of your home and you can prove it, you can also deduct electricity bill, internet fee, everything, allocate for that place as well. So it is really important to use actually these deductions to lower your tax burden as much as possible. But of course, after all these deductions, and to be able to do these deductions, you will be able to categorize your expense as well, and separate, of course, your business and personal related expense, as we also discussed previously. If you can do that, actually, the bookkeeping software you use or the advisor you kind of refer all your books will be handling all reconciliation process, categorization process, and will create your financials to be ready for tax returns. But it is not a, kind of process to afraid of, but it is an area to be very precautious. By the way, before kind of keep your records, you also need to choose your accounting method as well. There are two accounting methods in United States: cash basis and accrual basis. Cash basis actually only considers when the money hit your bank account. For example, uh, I paid a freelancer $100 for the marketing consulting service. And when I make the payment and when I send the money, I will record the transaction directly. But on the accrual basis, it doesn't care when the money hits the bank account. It only cares when the service is rendered or the product is sold. So in this case, in this example, I will record this when the freelancer performs his or her services, not when I send the money. So these are very different kind of methods. Generally, small businesses and new starters use cash basis bookkeeping, but especially for VC attracting businesses. So businesses who are looking for external funding or working with huge stocks, then they may also consider accrual based accounting time to time. But again, it's a kind of strategic move, so therefore you should definitely consult with your advisor before making any final decision. So maybe, by the way, I also saw your comments as well. And I see you are from all around the world. Software developer from Canada, IT from UK, freelancer from Brazil, tech startup from Dubai. Perfect. Perfect, actually, there are so many, but as promised, we will answer all the remaining questions after the session. So we didn't forget you. So, Begüm, actually,
Yes.
generally, we learn best from mistakes, and sometimes it is the most expensive kind of result. But as tax operations manager for a year at Clemta, what are the biggest mistakes or most common mistakes you see at founders?
So, first of all, as we already mentioned since the beginning, um, didn't generated any income. Like if you didn't generate any income, or even if you're in the loss, you have to file your federal tax return. Most of the people are confusing it because most of our clients are actually like angry about it. Why do I pay tax in the US? I didn't generate any money. I didn't earn anything. You should do it because you need to inform the IRS that you didn't earn any money. That's the whole point, actually. And since most of our clients, most of you who's watching this from all around the world, and you're not residing in the US and you're not very familiar with this US tax system, for foreigners, there are actually some forms to be filed during the year, especially if you own the company more than 25%, which is if you do not file it, there are too much penalties for you, starting from $25,000. And skipping it is like too bad for you. Like if you file your tax return on time, and maybe if you're not, you can't. I just saw a question, maybe the first question. One of our participants said, like, you sent me an email that explained how to pay the taxes in 2026 March. How can that be? And I have already opened and not started. So if you didn't even started your business yet, as I already told, you need to inform the IRS. Like even if your company was only active for a day in the fiscal year, you need to inform the IRS that I did not generate any money and this is who I am. Basically, this is my company and this is who I am. I don't have any money. I don't have anything to declare to you. So if you're skipping this, the $25,000 penalty will come to you. There's no escape from this unless you can actually extend the deadline for you, like for we didn't mention about it. So the deadlines for single member LLCs and C-Corps are 15th of April, and for multi-member LLCs is 15th of March. If
And
you're
this is
not
for
ready,
federal, right?
yes, for federal tax return. If you're not ready right now, maybe you're not very in a appropriate position to file your tax return with a expert CPA right now, you can extend the deadline for 6 months. And it's totally a legal thing. Like there's no harm for your company doing that. And this is actually one of the most important mistakes that most of the company owners do. And the other hand, I want to get into the sales tax, but it's very complex, so I don't want to start it right now.
So actually, maybe I can add something for extension. As Becky
Mm-hmm.
also said, there is 6 month extension possible to file your return. But if you had revenue and if you need to and if you are required to file and pay taxes in United States, then this extension
Mm-hmm.
does not extend your paying obligation. It only extends your filing obligation. So IRS also still expects you to pay your taxes, even estimated tax, until the exact deadline. But still, for example, if you didn't start your operations or if you are in loss for your first year, which is super. Well, then you can, since you don't have any, tax burden, you can extend your filing requirement, and that's all. You don't need to worry it. But if you are obliged to pay taxes and you know it before even extending, so it is the wise move to, pay your taxes until the, exact first deadline. And if you need still, you can extend your filing obligation for 6 months to file your final tax return. On the other hand, as Begüm also said, the deadlines for, federal taxation is coming and approaching fast. For single member LLCs and C-Corps, this is, April 15. For multi-member LLCs, it is March 15. These are actually federal tax deadlines. On the other hand, for state level taxation, generally, all states have different, final deadlines. For example, in Wyoming, it is your first of your anniversary month. So if you formed your company in, March 25, then you will file your state level report until 1st of March in the next year. But in Delaware, for example, there are fixed days based on company type. So you need to kind of look for, okay, here are my, state level deadlines, and here are my federal level deadlines. But of course, you are not alone. You can ask whenever you want. But still, these are different deadlines that I also wanted to, in advance too. Since Begüm also didn't start the, sales tax part, I can take here. So sales tax actually a part of state tax, and it's a kind of complex structure. Let me also show it to you. So here we discussed, state level taxes very shortly, since generally you select for, tax friendly jurisdictions, states, so your state level burdens are generally low. And if you are making sales through Amazon, Etsy, or marketplaces, generally they collect sales tax on behalf of you and pay to the relevant states. Again, you don't need to worry about it. But if you have your own website and you are making sales through, Stripe, Shopify, all other payment gateways, then you may be subject to sales tax. It is super close to VAT. Of course, there are some nuance differences, but it is very close to VAT. But um, actually, kind of contrary to the other countries, it is not a fixed rate. There are 50 states and 50 different rate for sales tax. For example, in Delaware, there is no sales tax. It is 0%. But in Wyoming, it starts from 4%. In New York, it starts from 6 and up to can get up to 8.8%. So it depends on the state, and also it is kind of calculated based on where your customer is located. So if you are making sales yourself, not without a marketplace, you need to take a close consideration for this, since sometimes entrepreneurs don't know this, and sometimes they also miss our newsletter as well. In this case, when it becomes late, they may also kind of face some state audits or sometimes interest, of course, for the non-paid taxes. But still, it is a kind of complicated process, so you need to again consult with a advisor or your CPA. So what else? Actually, as we already discussed, mixing personal and business expenses are kind of one of the really major mistakes, since it's also becoming very difficult for you to kind of separate these expenses when the year ends for your tax return. So you also have difficulty after 1 year passes. Even you don't remember what did you do with this expense at all. So, and if you start, mixing your personal and company level expenses, again, it will also pierce corporate veil, which is a protection for having a company, and it can also create your personal liability. Therefore, we don't generally, recommend you, and we generally recommend you avoid this. And lastly, failing to document all these transactions, as we also said, when we file our federal tax return to the IRS, we don't need to file all these agreements, in invoices received to the IRS. We just need to file our return. But maybe years later, the IRS comes to us and say, hey, I want to see your books, I want to see your records, whether you filed your returns correctly. And in this case, we will need to show everything to them. Okay, I showed this expense to you in my return. Hey, here is the agreement for this expense, or invoice for this expense, or for, receipt for this expense. So we need to show all of them in a possible audit. Therefore, you also need to keep these records with you as well. Actually, these are the most common, how can I say, mistakes, pitfalls general entrepreneurs face, but we generally also learn from mistakes. This is why we also really love having this page at the end of each slide. So you can also see what are the common mistakes as well. And by the way, Begüm, I also see so many questions, but I need to start from
Yes.
at least a point. So my question is coming to you. For a UK tax resident, by the way, for the ones who couldn't see the, Q&A box, it is under the three dots at the end of the, Zoom page. So if you cannot find, you can also just raise a hand as well. We will help you. So for the first question, for a UK tax resident owning a single member Wyoming LLC, what is HMRI's default classification of the LLC for UK tax purposes? Transparent or opaque? So, first of all, for UK taxes, you need to kind of consult with our UK accountant as well for the best answer. But actually, first of all, a UK government, of course, will see it as a separate legal entity in United States. But since you will not pay any taxes, or you may not pay any taxes there, still you may need to pay your personal income tax in UK as well. So you need to kind of first of all check double tax prevention agreement between the United States and UK, and maybe check with your accountant based in UK as well. And if you don't have any, of course, you can also consult with our UK team too. So, hello. Thank you for such a great job. Thank you very much. I have a doubt. I use Mercury for income and expenses in USD and AirWallex for income in Euro. Clemta syncs with Mercury, but not in AirWallex. How do I sync with AirWallex? So, actually, Mercury provides you a bank account, and we are kind of integrated with more than 20,000 banks all around the world, including the US ones and the other ones. But for solutions like AirWallex, or Payoneer, since these are not banks, we cannot integrate it with our systems. But what we do, if we do our bookkeeping, your bookkeeping directly through our CPAs or bookkeepers, we will take your transactions and your reports and we will reconcile it manually, so you will not need to consider that. But since these are not actual banks, we cannot integrate them directly since their system doesn't work like a usual bank. Um, do I need to save every insignificant invoice like a .com domain or a cheap plugin for WordPress? The good thing is, since you are international founder, generally you do every transaction through bank account, or you just give your email at checkout where they send invoice. So you will keep all these records without even noticing it. So mainly, if you don't do anything cash, you will generally keep these records even you don't want to do. So, but yes, in principle, since you have a US business and since you have a company, you need to keep all invoices, whether these are insignificant or not. Of course, if you don't keep these records, you cannot deduct them. It is a vice versa. So, Digma, I have a question for you.
Yes.
If I don't have any income as a single owner LLC in Wyoming, and I am 100% foreigner, are there any other forms that I should file apart from the federal tax return?
So, as we firstly mentioned in the beginning of the session, there are two main tax obligations during the year for a company. As a Wyoming LLC, you need to file your federal tax. I'm really sorry. You need to file your state level tax return, which is called annual report in the Wyoming state, every year on your first day until your first day of anniversary month. For example, if you formed your company on May 2025, you need to file your annual report in 2026 until May 1st. Our team can handle this for you if you would like to handle your tax filings with the expert team. On the other hand, you have to renew your registered agent and business address and mail forwarding services every year. If most of the company owners are skipping this thing because they're considering once you obtain an address, it will be for everything, but it is not. Most of the time, it is going to be expired after the first year. It will be renewed every year. Therefore, if you skip this situation, if you skip this obligation, actually, your company will lose its good standing, and you're going to be your company is going to be administratively dissolved, which means you will not be an active company if you're using Amazon or maybe Stripe or Shopify or Etsy. These platforms will think that your business is closed and inactive right now, and your operations would have to be stopped. Therefore, you need to make additional payments and sometimes maybe pay penalties to activate your company again. So you need to be very careful about the state level obligations, because skipping federal tax obligations would not make you lose your company's good standing, but state level tax obligations will result in losing your company's activeness.
Yeah, and besides that, actually, there are a few more forms and actually filings you may need to, file with the US state or federal authorities, but it depends on your company type and your operations. Therefore, we generally recommend our users to, follow our newsletters, since every month we also share upcoming deadlines as well for generally, based on general needs. For example, if your US company has an international bank account in another country and has more than $10,000 deposit there, you are required to file a form like FBIR. So this is a separate form, and you need to file it until the end of October 15th at the latest. As well as this, since you're an international founder, there are some certain forms that you need to file together with your tax return. Therefore, we strongly recommend follow our newsletters, especially for upcoming deadlines. This will help you a lot to keep on track. So, we have a question about, does Clemta Pro plan handle my taxes, or do I have to purchase a zero plan? Actually, Pro plan handles all your taxes, both state and federal level taxes. And besides that, it also provides you an automated bookkeeping solution. So you don't need to purchase any additional zero plan. But if you say, okay, I want you keep my books, manually by your CPA and bookkeepers, then you can upgrade to premium. And besides everything, we will also do your monthly bookkeeping, and you will also have strategic tax consultations with our CPA as well. But besides that, under Pro, you will be able to get your federal tax return, state return, and also your all-in-one actually Clemta dashboard, which also includes automated bookkeeping software. So, yeah, therefore, Clemta Pro plan, I understand, will be kinda enough for you. So besides that, for the so Begum, how can I access the IRS and clear my records? It is a kinda different question.
Mistake.
Yeah, no, there are some records to be cleared.
So, the thing is, there might be two cases. First of all, if you considering you filed your federal tax return previously, you have to keep those records. You had to keep those records, that fax records or maybe the forms that you signed, in somewhere. Because if you lose that form or those IRS faxes, the IRS will consider that you did not file your tax returns, and you have to file them again. Because if your company was formed in 2023, in 2024, you filed your federal tax return for the previous year. And when it comes to 2025, you will filing your federal tax return for the previous year, which is 2024. I'm not really sure that I'm being clear right now, but if you want, I can explain it much more easier. So the first thing is every tax return is filing retroactively for the previous year. If you do not have those records, you cannot file your federal tax return for the current year, because on the IRS system, when you're trying to file a tax return, it actually requires you to show the last year's tax return, and if you do not have it, you also have to file that again, and it is gonna cost you a lot because you already filed it, and now you have to file it again. So we need to keep our records clearly, and keep the federal tax return faxes and the signed forms in somewhere secure to avoid this kind of situations. On the other hand, if you did not ever file your federal tax return at all, there might be some late filing penalties on your behalf, and with the late filing penalty abatement letters, you can actually avoid them, but it actually requires a little bit expertise. And in Clemta, we do it with our CPA's help. And while you're filing your federal tax return, if you have any late filing penalty or some other penalty, we're actually writing a late filing abatement, and therefore not 100% guaranteed solution, but most of the time we're actually helping the clients to avoid this kind of penalties. So the thing is, you're not actually there are no records that IRS keeps for your tax returns. You have to keep the records by yourself. Hope it is clear right now.
So actually, it's clear, but of course, it is not what they expect or hear about. So the important point is, IRS, of course, keeps the record for itself, but generally, if you filed in the previous years, they don't want to, share it with you directly. They can only, share it with your, business address, but it also comes in months. So generally, as Begüm said, it is best to, keep your records and keep your tax filings as well. If you have any missed tax return, again, you should definitely consult this with an advisor to discuss what would be the best approach in this case. Sometimes if it depends on many factors, whether it's state level taxes or federal taxes, or whether these are international fund related returns as well. So based on your circumstances, your advisor will help you better, of course. It is be misleading you if kind of try to show you a exact way before you knowing your exact situation in this case. So we have a question about having an LLC in Wyoming for e-commerce business. So it would help you a lot if you have a person who can speak Arabic to clarify my questions. Yeah, we of course have Arabic fluent team members. So just reach out to our team and ask for assistance in Arabic, so we can also either have a meeting in Arabic or help you through, email in Arabic as well. No worries about it. Um, One of the best questions I like. So, as a foreigner, do I need an ITIN to file the state federal tax returns? First of all, Begin, what is ITIN?
An ITIN is individual tax identification number for those people who's not residing in the US and who don't have an SSN. It is actually a personal number, as already mentioned. It's called individual number. You can obtain an ITIN from different reasons. Most of the time, the company owners are choosing the reason as the company because they want to exempt the tax. While you can often start your company business journey just an EIN, which is your company's tax identification number. Sometimes foreign founders trying to obtain ITIN for different purposes. For example, like making a credit score in the banks, and sometimes the payment gateways requires, such as Stripe or PayPal, require the identification number, because you are actually your company's responsible party, and they want to make a strong connection with you and your company and those platforms. And most of the time, the ITIN is mandatory if you are claiming a refund, or maybe if your company, not your company, maybe if your country, your residing country, home country, and the US has a tax treaty. And if you want to claim the tax refunds under the withholding rate, you should obtain an ITIN.
Yeah, actually, as you said, while EIN is the tax number of the company, ITN is the kind of tax number of the owner of the company in the United States. And sometimes for tax return, it's maybe required, but sometimes for a special especially for non-operational companies, non-operational LLCs, and sometimes for C-Corp owners, it may not be required. By the way, in the industry, you will say all advisors saying, okay, you should definitely have an ITIN to file your tax returns. It is not required all the time. Therefore, you should definitely work with a good advisor in this regard. If you are not required to have one for tax purposes, then you won't need one and you don't need to pay additional fee for getting an ITIN. But for besides for taxation, sometimes, as Begüm also said, it is kind of best for you to get an ITIN for your business. For example, if you would like to have a PayPal account for your business, or if you would like to have a Shopify payment account for your business, or sometimes if you would like to have a personal bank account in some physical banks in the United States, so then you may need an ITIN to kind of start your US credibility, credit score in the United States, and also increase it, so grow your credibility there. But besides that, for taxation, especially half of the time you are not required to get an ITIN, so you need to work with a really good advisor to take the best action for your business and also yourself. But for the state returns, generally it is not required. For sales returns, sometimes sales tax returns, sometimes you may be required based on the state you're operating in, you are incorporated in, etc.
Mhm.
By the way, Begüm, it's also one of the most, no, how can I say? It is one of the information I hear all the time, and it is one of the worst information I also hear most of the time as well. Can I only apply for an ITIN during the tax season?
Not really. You can apply for the ITIN any time of the year, but if you're applying during the tax season, your number will be applied for with I'm really sorry. If you are applying for the ITIN along with your federal tax return, the number and your federal tax return, which will be personal tax return at this moment, because you are obtaining an ITIN and filing a tax return. Individual tax identification number and tax return will be get along together, and you will now filing your personal tax return, and after you submit your tax return, the number will arrive a couple of weeks later maybe. But you can always apply for an ITIN during the year. It's not actually mandatory file your federal tax return with your ITIN. This is actually one of the most complex questions most of our clients are saying. And other thing, I'm a little bit confused right now. If you have an ITIN, you don't actually have to use your ITIN with your company's tax return, by the way. Most of the other service providers telling this to their clients and kind of making them responsible out of nowhere. So this is kind of like common mistakes most of our clients are facing. Like, actually, it's not a mistake. It's out of coming from not knowing. And what else can I say about it? Let me see. If you don't want to have an ITIN, by the way, if you obtain it already, like, but right now you don't need it, you don't want to use it anymore, You can simply skip using it with your tax returns and it will deactivate itself after 3 years. And if you wanna use your ITIN all the time, keep it active, you have to use your ITIN with your tax returns or any other tax purposes for three consecutive years. Therefore, it's actually not true that you can only apply for an ITIN during the tax season. So you can always apply for it.
It is one of the things I hear almost all the time, but it also leaves entrepreneurs lose a year while waiting filing their tax return, and lose 1 year in their business. To sum up,
Mm-hmm.
you don't need to wait for your tax return to get an ITIN. You can get an ITIN all throughout the year. And if you don't use your ITIN for 3 years, your ITIN will be deactivated. So if you want to make it keep, you will need to use it in your tax return. And if you wanna, have your ITN together with your tax return, as Begüm also said, you can make the application while filing your return so that you will be completing your tax return while you also applied for your ITIN. So kinda two rocks for one bird. So yeah, that's generally it actually, and it's generally one of the some of the most frequently asked questions in terms of ITIN. So there is another question. Let me continue. I need a bookkeeper for 10-15 invoice per month and 20 expense month with accounts at Mercury and Wise, including multi-currency invoices and expenses and bank statement reconciliations. Do you use an accounting package that streamlines this to replace spreadsheets, and if so, which one? So, if you are subscribed to our Pro plan, you will be able to, integrate your bank accounts directly to the platform and get all transactions automatically. So you'll be able to do all these things through our automate bookkeeping software. If you would like us to do this manually for you, you can also upgrade to premium and we will handle this. Sometimes, like in your case, you don't have so many, transactions. In this case, you can purchase Pro and also add on, catch up bookkeeping for your previous transactions. We can also do this as well. So after this webinar, just reach out to us to share your, current balances and your information so that we can kind of craft the best package for you. Another question is about UK again. If HMRC treats the LLC as OPEC, are US taxes charged on the LLC's profits or only on distributions made to the member? So, since there is no corporate tax in LLCs in principle in the United States, so the US will not kinda issue any corporate tax obligation or burden or over your company. So even if you didn't distribute it, your profit or your losses to your owner, since you will not pay any corporate tax on the corporate level, all profits and loss will be kind of flowed into your personal account. So regardless whether you distribute it as dividend or so. So in any case, you will not pay any corporate tax in the United States, but based on double tax prevention agreement, you will either pay your personal income tax in the United States or in your home country. And sometimes, even if you have paid in the United States, you will show it as a credit in your home country and deduct from your personal income tax in your home country. I know it's kind of complicated and it sounds complicated, but still, if you reach out to us after this webinar and sharing your exact circumstances, of course, we would be happy to help. By the way, you can also reach out to our tax@clemta.com email for any tax-related queries. Then we can also provide customized, support for you as well. So, I think we answered most of the questions, but generally, no, these are all similar questions. Therefore, I also passed some of them. But, let me also ask another question. If I have zero income and if I would like to file state tax and federal tax, which service I need to select and how much is the cost for the same? You just need to select Pro package. It includes both state and federal level returns and also information for IRS as well. And for the year, you can also, when you get any revenue, you can also, or expense, you can also use accounting software we will also provide to you. So, Begüm, I think we covered almost most of the questions. These are some repetitive ones, so I will just skip these. As I said, we are here to help you. So, by the way, after this webinar, we will also send you a follow-up email as well. So, if you have any question, just reply to that email, or you can directly reach out to us before our follow-up email too. We would be happy to help you. And thank you very much for being us today. Yeah, Begum, thank you very much for kind of joining today as well. It was a great session with you.
Thank you so much, and thank you so much for everyone that joined and listened to us. Hope this tax season goes very great for you, and I wish you good luck with your business.
And of course, we are always here to help you. So
Of
take care of
course.
yourself and have a great evening. Bye bye.
Goodbye.